Hello and welcome to the latest Manufacturing Management live panel. I'm Chris Beck, the editor of Manufacturing Management. Today we're going to be looking at the results of the latest Manufacturing Outlook report, which was produced by the manufacturers organisation Make UK and business consultancy BDO. It looked at the manufacturing sector's performance in the third quarter of this year. The second quarter, in case you weren't aware, was one of the worst on record for the UK economy. Lockdown took its toll across all sectors, really, and obviously manufacturing didn't escape that, with unprecedented lows recorded in both confidence and investment intention. As we'll discuss shortly, things have begun to pick up, but we're by no means on a smooth road back to recovery. And in the past couple of weeks, COVID cases have begun to pick up again across the country, leading to fears of a return to the lockdown conditions of earlier in the year, and obviously all the knock-on effects that will have for business. And on top of that, in case that wasn't enough, there's also the challenge of Brexit and all the uncertainty that could bring in the new year for businesses. So all in all, it's really shaping up to be a turbulent few months, or who knows, maybe even years ahead. So to try and pick through all this, I'm joined by Tom Lawton, who's the head of manufacturing at BDO, and Fahim Khan, senior economist at Make UK. And thank you both for taking the time to be with me today. Now, Tom, if we start with you, the figures from the report, when taken in isolation, look pretty concerning. Output balance 36% down, orders both domestic and overseas down by a similar amount, but confidence is up. Why is this? Obviously, we're still in very concerning times, and are you pleased and I guess surprised by how well the sector is, or how the sector is at least beginning to start recovering?
Yeah, I think the upturn in the Q3 results partly reflects the fact that Q2, as you mentioned, was such a poor quarter. Yeah. I mean, they were record lows, and I think everybody was hopeful that that was the worst of the situation through lockdown, and the next quarter would gradually pick up. Couldn't be any worse. And although it's bad, it is better than quarter two. I also think the confidence level does reflect both probably the timing of when the survey was taken, but also I think the feeling from quite a lot of manufacturers, and certainly a lot of the clients I work with at BDO, is that they have managed quite well through the worst of the crisis, the lockdown period, hopefully the worst of the crisis. They've managed through that. So I think the confidence has come from the fact that we've made it so far, we've taken the right steps, we've taken actions, we're still in business, and there's a level of confidence that says we can carry on and we can continue to trade and hopefully become more successful as time sort of reduces the impact of COVID.
Sure. Fahim, have you got any thoughts to add?
Yeah, I mean, I think Tom is right, and also partly reflects the timing of when the survey data was collected, just around the time lockdown was being eased in the UK, and so there was an area of, things are going to start opening up again, demand is going to come back, the orders are going to come back. Of course, our data shows that there was some improvement in output and orders, but not to the extent that, of course, many would have liked. It's also worth noting that, we assess confidence on a scale of 1 to 10, where we define as 5 being anything above 5 being positive confidence. And the business confidence for this quarter is still only just marginally above 5. So although businesses are confident, they are cautiously confident. No one's giving a 10 out of 10, at least in this climate, but they are hopeful for the future.
Yeah, definitely. It's cautious steps, but as I said, the virus is kind of taking hold again. Cases are rising nationwide. We've had localized lockdowns for the past few months in places like Leicester and the northeast and the northwest. But there's talk of potentially tighter measures coming back into effect, and at the very least, the Prime Minister has said that he expects this disruption to last for many months to come. Should manufacturers be worried about that, and what could they be doing to prepare for any kind of bumps in the road? I don't know who wants to take that. Tom, do you want to start with that?
Yeah, sure. I think manufacturers would be worried about that scenario, but I think they will have also been making their own plans and considering how to deal with a continuation of the crisis. I don't think all manufacturing companies expected the worst of the crisis or to be over by end of August and September. So I think the government were making very positive noises, which I can understand. But I think manufacturing, by and large, was just also building in contingency plans for if this didn't continue to improve, or if it did worsen, if a second wave came along, what would they do and how would they react to that? I think ultimately that the big impact and the big confidence factor of anything like this is down to, it comes back to the consumers in some respects, and the core markets for manufacturers and who they're selling the product to, which often ends up being with the consumer. And that's where confidence is important. And that's where I think these repeated lockdowns and the local lockdowns will impact. But I think it's also pretty clear from recent comments from the government, and I think the Labour Party is supporting most of the actions of the government at the moment, that as far as they possibly can, they are trying not to impact business itself. So, you know, the lockdowns are impacting people, they're impacting the hospitality sector, but from a manufacturing perspective, just looking at that, I think the government, I'm sure there's other sectors, but the government seem to be very, very keen on keeping trade going and manufacturing going as much as they possibly can. And personally, I think the situation would have to become very critical to go back to that complete lockdown that we had before. And given that, I think manufacturing, again, goes back to my earlier point, is probably, that's one of the factors that I think is giving a little bit of confidence that the trade and their business activities will be able to continue, even as the government manages through different ways this particular crisis.
Quite a positive outlook there. Fahim, is that something you share and make your case?
Yeah, I mean, I primarily concur with what Thomas said there. I think the first lockdown would have served the purpose of at least allowing manufacturers to learn exactly what the impact of lockdown is. It's also worth noting that manufacturing as a sector is not necessarily required to shut down when there is a lockdown. So in lockdown 1, they were not required to shut down. They were open for trade. It's just that the demand had fell through, so there was no trade to be done. There are still some challenges that many of our members are still working through on how to implement social distancing within the workspace. So, you know, you still achieve the same level of output that you were pre-COVID with half the staff on the floor, and there are still some challenges there. I think the focus now is more about how to go more digital. You know, what do they need to invest in? Manufacturers need to look into whether or not technologies such as AI or industrial Internet of Things and these such as areas can actually benefit them, so that we are seeing more interest in these areas. So I think that will be an investment issue. But of course, our data does show that for the time being, investment intentions are pretty low across manufacturers in the UK too.
Do you think that's an issue that manufacturers aren't looking to invest? Obviously, you know, it's unprecedented, that word again, unprecedented times. But are they essentially creating a longer term problem for themselves if they're not investing in, you know, some of the technologies you mentioned there, automation, Industry 4 as a kind of concept?
So the situation is such that although manufacturers are keen and interested in making those investments, they are not able to in many cases. Yeah. So actually, our Q1 report indicated just before the COVID-19 crisis actually came to the UK and other Western markets that many manufacturers were intending to increase their capex over the next 12 months. So many businesses were ready to start releasing their wallets into new technologies and investments. But that could not be done so because of the pandemic, and actually the cash that was available for those investments have been repurposed for short-term business continuity, so to actually make sure that they're able to survive through the pandemic, and that's left them in a position with low cash flow. And although that they understand or are aware that the next step for their business is to actually invest in these technologies, they're not able to do so at the moment until the orders return, until the cash flow returns.
And obviously, you know, on that, we might as well look at kind of overseas conditions and the kind of export and import markets. And Europe is in the midst of a second wave. You know, there's countries like France and Spain who are really getting it hard again. Other countries, you know, South America, as an example, the USA, are different stages of the pandemic, and it's
Mhm.
not showing any signs of slowing down. What risks could this bring to companies that are looking to do business overseas? We start with Tom.
Yeah, and just quickly going back to that, the previous question as
Sure.
well,
Yeah.
and I think it partly connects into this. One of my concerns about the investment levels, and Fahim's point is perfectly right. I mean, companies are now looking to control the cash, so they are restricting investment, as I think is quite sensible. But I think it's that comparators. It's what are other countries doing at the same time, and particularly around digital transformation, maybe automation. And the worry that I have probably is that the UK falls further behind. It wasn't the leader in digital anyway. And some other countries have come out of this crisis quite well, you have to say. I think China seems to be back up operating relatively as normal. Germany, another one of our major competitors. So in terms of competition, the slight worry is that it just puts us a little bit further behind. And that's one of my concerns. In terms of markets, yeah, for sure. I think, we've been encouraged, the UK has been encouraged to trade globally, although the EU is still our biggest trading partner. And I think anything that impacts demand from any regions that people sell into is important and will have an impact. And at the moment, the virus does seem to be escalating in some quite important economies, notably, as you've mentioned, South America and USA and parts of the EU. You'd like to think, though, that the demand is still there in the pockets that keeps UK manufacturing going and supporting. And certainly the evidence that we have from the clients that we work with is that the demand has come back, if not 100%, to quite a high percentage from the various countries that our manufacturing clients trade with. And the hope, and it is a hope, is that despite the lockdowns, because I think most countries are trying to do what we're doing, which is not impact business as much as possible, that the impact is limited. And it probably all comes back to, I think at the end of the day, a lot of this will come back to consumer confidence, individuals' confidence, and how they feel about these issues, particularly about job security and the spending patterns from consumers, which ultimately will feed into the manufacturers of the UK and worldwide.
Yeah, definitely. Fahim, is there anything you wanted to add about overseas markets or export?
Yeah, I mean, just from the point of view of the survey data, I mean, our recent Q3 outlook did find that export orders were performing slightly better than domestic orders. That is primarily a reflection of markets being opening slightly before the UK's around the world, not just in the EU, but also what we found interestingly is one of the questions we ask is in what regions of the world have you seen more positive demand conditions to our members? And normally we find the EU as being the most important one, even during the crisis. And that was still true today because that's where most of the business is done. But what's interesting this quarter, which has never usually happens before, is that East Asia in general came up as the second top market for demand being positive, where normally it's North America that is in that second place figure, but North America has dropped to the third place figure on that area. That is also just a reflection of China going through the pandemic much earlier than the rest of the world and opening up their markets. And actually, once you get through the pandemic, it does indicate that the demand does come back. In China, that demand did start coming through again. The goods were being delivered through the borders again, and you would expect that, barring another strict lockdown across the global economy, that if the EU was able to operate again, if North America is able to operate again, that the demand should return. At least that's what you expect.
Yeah, I just want to pick up on something that Tom said around job security, and obviously, there's a lot of consternation across all sectors at the moment, especially things like hospitality, around job losses. Obviously, there's a lot of redundancies coming, and that's reflected in the report, which it said that employment has continued to fall. even as you know, as the furlough scheme comes to an end, redundancies are taking effect. And I think I'm going to quote directly from the report, and I'll say that there's a risk of continued bleed of jobs in the sector for the rest of the year. Now, obviously, the Chancellor has announced some measures to try and protect jobs and get people working again over the winter, but does more need to happen in the kind of immediate future to stop mass job losses? Tom, I'll let you start.
It depends on your perspective in a way. I think the furlough scheme, the job retention scheme, was very successful, and it did achieve what I think the government wanted it to achieve, was to give that breathing space through the worst of the crisis to all industries and sectors. But talking about manufacturing, it gave manufacturers that space, that time, and that support to carefully consider how they wanted to work their way through this crisis and what they might look like at the end of it. I think the job support scheme is early days yet, obviously, so we don't quite see how that's going to work. It probably won't work as well as the job retention scheme because it's less generous, and obviously there is a cost implication, much more of a cost implication to manufacturing companies. Where I think we'll be, though, unfortunately, is that partly because of COVID and partly because of the way people have looked at the businesses maybe differently or more harsher in terms of what do we actually need in terms of resources to successfully operate this business. And now the furlough scheme is ending. I think that there will almost certainly be a wave of redundancies and job reductions, partly because directly as an impact of COVID, but partly indirectly as manufacturers have just looked at the business and thought to themselves, we can operate in a slightly different way. We don't need all the resources and all the staffing that maybe we had 6 or 9 months ago. And even working from home has changed some of the dynamics for a lot of businesses. It's less impactful for production in manufacturing, obviously, but I think there's a lot of innovation and change happened in the manufacturing sector over the last 6 months. And unfortunately, I think that will result in some further job losses over the next period.
Baheen, is it something you're seeing with Make UK members?
Yeah, I mean, certainly we have been speaking to our members about how they have used the JRS, and as Tom said, it has been very successful. Some members have also very clearly indicated to us that they've actually been able to protect many of their jobs, and actually through the pandemic, a lot of these jobs which would have been made redundant in the absence of the JRS will no longer be so. I think the issue with where the JRS may have failed is because it was built with an assumption in mind that the pandemic would last a certain amount of time. And actually that pandemic has lasted longer than the JRS can go on for. And rightly so, the government has created a new JSS scheme, which is less generous, but and it will be used by some, but may not be good enough for others. But we don't expect any reduction in redundancies, especially because manufacturers themselves, who already are aware of which roles in their company will not exist in the next few months. They're not waiting for the JRS to expire at the end of October. They've been telling us that they're actually, if there's a job that's not needed anymore, there's no need to use the JRS as an alternative to an unemployment benefit, and is actually much more simpler as a business cost to make those workers redundant. I do think, however, in order to limit the job losses, what we have avoided doing till now is offering sector-specific support. And I do think that there are some sectors that will not be able to use the JSS because they're not able to actually fund the minimum 1/3 hours required with the scheme. So there will be the aerospace sector, which is such an important sector for the UK, as well as the automotive sector. And then perhaps we need to think slightly more creatively about sectors that are more vulnerable within the UK, especially within the manufacturing sector, where you have some sectors that are actually quite strong, like food and drink, but then some of the engineering-based sectors, which are actually still struggling or seeing a different timescale for recovery.
Definitely, that's an interesting point. Actually, all the furlough scheme and the JSS scheme have both, been economy-wide. Sector, it's not dependent on sector. Do you think more could be done to support individual sectors? And like you said, within manufacturing, even within manufacturing, there's the automotive sector and the aerospace sector, which are going to be struggling a lot more than some of the others. Do you think there's scope for a more flexible funding support for industries that maybe are doing better than others?
I think certainly the case will be that if the goal was to prevent job losses in viable jobs, which is what the government claims that they would like to do with the JSS scheme, in its current form, you may still lose some viable jobs just because of the restrictions aligned with the JSS. Although it's understandable that at this point the government, the JRS is not sustainable in its current form, so we couldn't actually extend that in the way it is. But we do need to look at the fact that some sectors, they rely on long order books for their business. So aerospace companies, they tend to have order books that go on for 5 or 6 years or even longer than that. And it could take a long time for them to actually see their orders coming back. It could be more than 6 months, or it may be after the JSS expires. And we need to think about, do they need specialist support or actually something different compared to other sectors, and are there other sectors that actually require less support? Because it is assumed that the JSS will be accessed a lot less than the JRS. So for businesses that have seen the demand come back, they're not going to use the JSS. And for businesses that are looking to make workers redundant, they're also not going to use the JSS. So it would not be as expensive to the government or the taxpayer as it was with the JRS.
Yeah, I'm sure. Have you got anything to add to that, Tom?
Yeah, maybe I'd just mention, I think for a number of years, and we, myself, BDO, others have tried to sort of suggest that a longer term, sustainable, strategic industrial policy, whatever you want to call it, but a longer term strategy for manufacturing would be extremely helpful, just to set that sort of the goalposts of 5, 10, 15, 20 years out, to say this is what we think we want the sector to look like, and here is how we're going to get there. As Fahim's mentioned, there are certain sectors within UK manufacturing that are much more exposed to the short-term impacts of the crisis, and aerospace is one. And aerospace I think is one of our world-class sectors. I think we're number 2 in the world in that. And the big worry that I have around aerospace, automotive, and some other sectors is a loss of skills. I think one of the things that's really damaged UK manufacturing over the years, and it's been very successful, it still is, it's very resilient, but our skill base has been eroded. And what would be a real shame is if in 3 years' time we found more of our skill base in automotive, in aerospace, had also been eroded further, and you end up in a position where you can't actually do the things that you want to do in terms of building production facilities or being part of a supply chain. I think some years ago, one of the comments about the UK automotive sector was many of the big car assemblers wanted to do more in the UK. They just didn't have the supply chain within the UK to do more in the UK. And I think that's the risk over the longer term, is that we end up with some of our world-class sectors that can't quite operate on the global stage anymore because we've lost skills.
As a counterpoint to that, potentially, Tom, we're seeing a lot at the moment, driven both by the pandemic and Brexit, which is something we might as well, is the elephant in the room that we might as well talk about, of companies who have been based overseas or had a production facility overseas or a supply chain overseas, looking at kind of reshoring some of that production or their suppliers to the UK. Obviously, there's the counterpoint that you just made about a lack of skills maybe stopping that, but is there an incentive, with Brexit and the kind of shortfalls in global supply chains that the pandemic has shown, for companies to look at bringing production or back to the UK, or looking at kind of more local suppliers? Is that something we might see further down the line?
I think, to be fair, we've probably started to see it already. I think supply chain risk is one of the big factors that's come through the crisis. I mean,
sure,
various things happened over the years, volcanoes in Iceland and tsunamis in Japan, that caused people to revisit supply chain and supply chain risk. I think COVID is going to be one of those where supply chain risk becomes really, really important. One of the answers to that is you bring your supply chain a little bit closer to home, you make it more diverse, and or you bring it back to the UK. I think the limiting factor for me, without wishing to sort of be overly despondent about the UK, at the end of the day, we're a relatively small country, and there's only so much demand that we can create within the UK. So we can bring production back to the UK, but we can't make more demand than there is demand in the UK. So I think we have to be careful that we still stay outward facing, whether we exit the EU, but the world is our marketplace, I think, in the UK. One of the reasons we've been so successful over many, many years is that we've always been an exporter. It's really important to us. And I think there's that balance. I would say that a number of my clients have international operations. And again, a number of them have taken the decision to actively stay within the EU, partly because they're thinking of the exit from the European Union. But I think it's quite helpful to have a base, and you might want to expand it in the UK, but also have operations in the European Union so that you can get relatively continued trading in the EU without too much hassle from those EU operations. And so you might actually see some work coming back to the UK, but I don't think it's going to be a flood.
No, sure. Fahim, is there anything you wanted to add to that?
I mean, certainly the idea of reshoring has been floating around quite a little bit more in recent months. I think from our members' point of view, many have indicated that they would like to reshore, but then when assessing the actual practicality of doing so, it always seemed like it was not very cost effective. And, you know, the access to inputs and resources and labor in other countries, and it's always going to be the cheaper option to keep it in outside. Although that you may still bring back some production, as Tom mentioned, there's only a limit to the demand you can create within domestically. And if we were to set a standard for reshoring, you'd have to also consider reshoring going the other way. So actually other countries have their own production facilities. And manufacturing is a very complex, globalized industry. You know, mapping the supply chain of the manufacturing sector is one of the most difficult tasks that you can ever imagine. Would not be possible to bring back every single part of a process for a good into the UK. I mean, there will always be one nut or bolt somewhere that's being made somewhere else that you're going to have to do it constantly forever over there. Which is why, you know, the concept of trade deals and free trade agreements and making sure that there are no delays on there's enough logistical capacity to make sure goods are moving are actually much more critical. And we should focus on resilience of the supply chain more so reshoring that production back to domestic shores.
That's a very good point. Yeah. Obviously Brexit is almost upon us. Well, it is upon us it has been upon us for 4 years now, but you know, it's getting closer and closer to crunch time. And, you know, manufacturers have had, or the entire economy, I suppose, to some extent, has had 4 years or so to begin preparing. But how much of a knock have the events of the last 6 months been? And, you know, just as we're getting over one thing, all of a sudden something else comes along to upset the apple cart. How damaging or otherwise do you think Brexit and the kind of start of next year could potentially be? Tom, Fahim, don't mind.
Well, Fahim, do you want to go first?
Yeah, sure. I mean, it's a difficult situation because we still don't know what the actual outcome of the will be, not with just the EU, but also what the UK is going to be setting deals with the rest of the world. I mean, at the moment, we have rolled over about 8% of trade deals that we already had within the EU to 50 smaller nations or states across the world, but nothing with large countries, although I do think something has been agreed with Japan already. It's worth noting that the decline in confidence that we've seen in Q2 of this year in our report was actually not as severe as the decline in confidence that we saw in our Q3 2019 report, which was collected just before the October 31st Brexit deadline from the UK. So this was at the time when we were supposedly about to crash out of the EU without a deal before the extension was announced. And actually manufacturers reported much lower levels of confidence at the time because they saw that as a bigger issue for their long-term business, especially because we tend to trade a lot more with the EU than with any other country in the world or any other bloc in the world. And I think there's something that many businesses are still concerned about, although in the short term, because of the nature of the pandemic, which tends to change on a week-by-week basis, confidence has become a little bit more short-sighted, where if things seem okay for the next week, then it's something to be confident about, and then 2 weeks later, it's something to switch about. But Brexit is certainly a more long-term issue that manufacturers are still trying to grasp with.
Yeah. Tom, is there anything you could add to that?
No, I'd probably echo the points that Fahim's made. I think it's probably, I think, just that continuing uncertainty. I mean, you mentioned, Chris, that we've been aware of this for a number of years, and we've talked about it for a number of years, but we've never quite worked out what it's going to be. And even today, when we're so close to the exit day, we still don't quite know if we're going to have a deal or no deal or some kind of middle deal. And I think manufacturers have just found the level of uncertainty about what they need to do very distracting and not easy to operate and not easy to set things up. And they are working to set things up. I'm a big believer that even if we were to crash out of the EU, which I certainly don't recommend, but even if we were, there would definitely be short-term implications. But again, I think that over a period of time, manufacturers would work out how to deal with that new normal, if we can use those words. I think manufacturing in the UK is very resilient. It's very innovative. We would find ways to make it work. But it's what's best, I think, for manufacturing. And I think manufacturers generally still would say having an appropriate arrangement to reduce friction of trade between the UK and the EU is the best method that they can see for working effectively going forward. And I echo that. The other slight risk, I think, and Fahim mentioned it, and I think you mentioned it, Chris, is that we often, and it's life, isn't it? You tend to be a little bit focused on you and the UK and what we're going to be doing. And then we sort of forget that there's a big world out there. And there's an awful lot of people taking decisions as well on the back of the UK exit from the EU. So an awful lot of direct investment comes into the UK from overseas. An awful lot of our manufacturing companies in the UK are owned by overseas owners. And they're looking at how we exit the EU. They're assessing the implications for their strategic decisions. And I think one of the things that it will only be clear if we do have a hard exit that causes significant issues, the actual impact might not be clear for several years. Japan might suddenly say, do you know what, we perhaps won't invest as much in the UK. America may decide to use somewhere else as a platform into the EU. You've also got the EU might be fighting its corner a little bit harder than we expect. They are able, I'm not sure that they follow the rules completely, but we've already had France pretty much setting up a very clear support mechanism for automotive within France. I mean, right at the start of COVID, they said, we will support the automotive sector. We will not let this go down. It is a strategic industry for us. And one of the easy things for the European Union to do is just revisit their supply chains. And instead of buying product from the UK, they buy it from within the EU, within their trading bloc. I think there's lots and lots of implications. And I think it is that uncertainty that's a bit wearing on manufacturers at the moment.
Yeah. Something you mentioned, Fahim, is that the pandemic has kind of shifted people's outlook on things, and it's become much more short term. If it's things are going well, back in July and August when cases were low and things were reopening again, we could all go back to the pub and see our friends again. I imagine confidence was quite high. That's obviously now cases are going back up again. A month or so later, it's confidence, it stands to reason, is back down again. Do you think we run a risk of only looking at at this current snapshot in time? The going is good at the moment, so we need to make hay and not really think about what the picture could be in a couple of months' time. We spoke earlier about assuming that the pandemic would be all over in, in 3 or 4 months, and Q2 would be the bad one, and by Q3 we'd be flying again. But obviously that's not quite the case. Do you think we run the risk of kind of short-term thinking?
I think at first that is what we saw, because there was so much uncertainty of how a pandemic can evolve. Because for many people, it's the first pandemic they've ever been through, and so they don't understand. And it is the way the government also operated a lot of their announcements on a daily basis. I think Boris Johnson yesterday announced that people should start going back to the cinemas again, because cinemas announced that they were going to close down. And there is uncertainty on what the government is going to say next. But I do think that although that there was a risk of that happening at first, manufacturers are sort of learning that daily changes may not necessarily impact the long-term plans that they have. And they are starting to look at the long-term plans again, although the outlook for the short term of the next 3 weeks may be, what is the plan A, what's plan B, what's plan C, if we do a certain amount of orders or not, what should we do next? They are making more contingency plans. I think there's been a rise in demand for risk management services nowadays, what I've heard about quite a lot. A lot of my companies are using risk managers that they're getting externally to actually assess what their contingency plans should be. What should they do in scenario A, scenario B, and so there's a degree of learning taking place where even though this is the first pandemic, if there was a second one, it would not be as bad for business in the long term, which is a positive thing. It's a good thing that they are opportunity to learn.
Yeah, it's an interesting thing. Tom, do you think the government could do more to kind of encourage longer term planning, instead of, exactly like Fahim said, daily certainly in the early days, daily briefings, information and advice changing, if not on a daily basis, and certainly a weekly basis, and being quite hard to keep on top of at times?
Yeah, as I mentioned before, I think it comes a little bit back to that, an industrial policy or a strategic plan. And if you're thinking about manufacturing, it's and other countries have it, and it does set that long-term framework better. So you can cope with short-term issues better if you have a long-term goal and strategy. I think they just become steps along the way, and as Fahim says, you respond to them, but you're still looking at the long-term strategy of where you want to be. I think most of our manufacturing companies are doing that. They do that very well. What they don't have around them, I don't think, is the government providing that sort of overarching strategy. And that would be helpful, I think. I wouldn't overly criticise the government in the early days for the daily briefing.
No, sure.
I thought that was helpful and necessary. But it would be good to see them start setting out some longer term plans and thoughts, and not responding to the day's news. I can understand it's really, really difficult, actually, because the news headlines are coming out thick and fast and 24/7. But I think it's really important. And as Fahim said quite rightly, it's just important because it enables manufacturing, in particular, just to understand where they are in this slightly longer term pattern. And by that I mean it's not state aid particularly, but it's just incentives around capital allowances, it's tax programs. It's just providing that framework that says to manufacturers, we believe in the sector, we want you to be here for the long term, and we're supporting it. Fantastic job in the job retention scheme, I have to say. I thought that worked really, really well. And I guess now I might be saying, well, what comes next, government, to show that level of longer term support for the sector?
Yeah, I think that's a really interesting point. We've kind of survived the immediate, the very sudden shock of the pandemic and everything having to shut down, and now we need to see a longer term plan just to build business confidence again, and kind of understand that even if it takes 5 years to get back to where we were, at least the government or whoever have a plan that we can work towards. Hopefully, Q3 of this year showed some improvement. Who knows what even Q4 of this year, let alone into next year, will show. But do you guys think that we're on the road to recovery, and these kind of green shoots that we've seen, do you think they're sustainable into the beginning half of next year, regardless of what, it's a big if, regardless of Brexit? Do you think business is confidence is growing, Fahim?
Yes, I mean, from our survey point of view, we do also ask what do you expect output, orders, employment, investment, etc. will be in the next 3 months. The trend that data is exhibiting from Q2 to this year to Q4 expected this year is that it is on an upward trend. So manufacturers do expect that things will be better than they were in Q2. And of course they have to be, because you're coming back from a much lower base. So when you're going from 0 output to 50 units of something that you're making, that is going to be suddenly seen as a growth in the sector. However, the sector also indicates that they will still be in negative balances, which means that the sector will still be in decline, or will be much smaller than originally it would have been in the absence of COVID-19. And we actually did some forecasts on this earlier this year on a separate report on COVID-19's impact on manufacturing, and found, or our expectation is, and also we put these forecasts into our Q3 report, that we expect the sector to decline by approximately 10%, regardless of the growth that we will expect to see in the end of the year. The total decline will still be large enough to make the sector itself smaller, and we think that will be about approximately £10 billion smaller for manufacturing, at least in 2020, but we do expect to see some of that growth returning in 2021, and that is sustainable regardless of the outcome of Brexit, although Brexit will slow that down to some extent.
Sure. Yeah, Tom, if we were to sit down in 6 months' time, beginning half of next year, how do you see the landscape? Crystal ball time.
Well, if I had a crystal ball, I'd probably be focusing my efforts on winning the lottery, I think. I think you have to travel forward with confidence and optimism, don't you? You can't sit here, and I know all of my clients are the same, you can't sit here thinking the world's about to come to an end, and what can we do about it? You make plans, you just work forward. If I had a crystal ball within 6 months, it's really hard on this, because it's there's so many factors coming into play. I would like to think that we've got more control over COVID. I'd like to think that there was a higher level of optimism within the country, as well as within the manufacturing sector. And I'd like to think that more people were able to see that perhaps at the end of March that the summer was coming back, and things were just looking better, really. It's a tricky one to call, because as Fahim says, I don't think we've been used to a pandemic like this for a number of years. I think the last big one was just after the First World War, wasn't it? So quite how we respond, but you can't help but think, I think, that things will get better. They will. The question of timing is the issue, but I would like to think in 6 months' time we're starting to look forward with much more optimism.
Definitely, I think that's a very positive note to end on there, Tom, and hopefully all that gazing into the crystal ball was hopefully pretty much spot on. It's been a really
buy a lottery ticket now, Chris.
Yeah, exactly. Yeah, it's been a really interesting conversation. It's a really interesting report that you guys put out. I'm sure we'll do something similar for the Q4 report, just to see how things are tracking. But it's always good for those people who are watching this. If you've got any comments, as always, just let us know. Either comment under the video or email me, chris.beck@markallengroup.com, with any feedback, any thoughts, any troubles that you're having that maybe we haven't covered in this conversation. We can pick them up as and when we do another one of these. But for now, thank you to Fahim and to Tom, and thank you everyone for watching.
Thank you.
Thank you very much.